Welcome. In this video, Xcn coin price is at the critical place. Is the big increase coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. A careful examination of the chart reveals a large-scale downtrend line that has been in place for quite some time. This trend line is an important technical barrier that market players closely follow, as the price has repeatedly touched it, and each time it has come under some pressure from this level. The existence of such a major trend line is of great importance for technical analysis, because when such trends are broken, strong price movements usually occur that will determine the market direction. The price has touched this falling trend line many times in the past and has reacted downwards, meeting resistance on each contact. However, at this point, the price has reached this strong trend line again, and this time the attempt is more promising than the previous contacts and is supported by strong signals. In particular, the increase in volumes as the price approaches this level again shows that buyers are gaining strength and the selling pressure is slowly starting to ease. This is one of the factors that significantly increases the likelihood of the trend line breaking to the upside this time. Large-scale downtrends are among the technical structures that market makers and institutional investors watch carefully, because when such trend lines are broken, the general perception in the market can change in an instant. When investor psychology is dominated by the idea that the bearish period is over, this can lead to significant buy orders and a rapid rise in the price. The current situation suggests that exactly this kind of breakout is imminent. Moreover, this major falling trend line is not only technical resistance, but also a psychological threshold. When an asset that has been in a downtrend for a long time breaks this trend line to the upside, investors see this as the beginning of a new story. For this reason, such trend breaks are often followed by a sudden change of direction in the market, and this new direction can continue upwards with great momentum. Another important point is that this trend line has been tested many times before. In technical analysis, the more contacts there are, the stronger that trend line is considered. However, this also means that with each contact, the durability of the line decreases. Because the more resistance levels are tested, the fewer sell orders at that level. Therefore, the price is closer to breaking this line on its next contact. It's a similar situation at the moment. The price has reached this critical trend line once again, and now the selling pressure at this level is much weaker than in previous contacts. In particular, the constructive behavior of the price during its approach to this trend line, for example, the formation of rising lows, the increase in volume, and the upward signals of momentum indicators, significantly increase the probability of this breakout. Technically, this could herald a strong breakout. If the price clearly crosses this falling trend line to the upside, and this breakout is supported by volume, it will open up a much wider technical upside. After such major trend breakouts, the price usually tests the previous horizontal resistances and may be able to break through levels that have been difficult in the past. This is because this breakout causes both short-term speculators and medium-long-term investors to rebuy positions in the market. This ensures that the uptrend is not only short-lived, but also permanent and healthy. With a solid technical structure, it is quite possible that the price will start a sustainable upward trend after the breakout. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. When we analyze the movements on the chart within the framework of the Elliott wave theory, we can say that the current market structure is quite remarkable and open to positive expectations. The current structure indicates that we are nearing the end of the second wave of the Elliott wave theory's early stages. This means that price action may be preparing to transition to the third wave in the near future. As many traders who are interested in technical analysis are well aware, the third wave of the Elliott wave theory is usually the phase of the strongest, broadest, and fastest rises. Therefore, the fact that there are signs of a transition towards the third wave in the current structure is a very exciting and promising development for investors. The second wave is often a correction phase, during which market participants review their positions. Weak hands are eliminated from the market, while strong traders anticipate the potential of the third wave and try to evaluate appropriate buying points. The current technical structure suggests that the lows of the second wave are approaching and the price is gathering strength from this area. This suggests that the ground is being prepared for the start of the third wave, and that the price is likely to make a strong breakthrough in the coming period. According to the Elliott wave theory, the third wave should be at least 1/618 times the length of the first wave. This ratio is calculated in line with Fibonacci levels and is often used by technical analysts to measure the strength of the third wave. However, third waves in the markets often exceed this minimum and reach higher levels. In particular, in some cases, the third wave can go as far as 272 Fibonacci extension levels. This offers traders great potential not only in the short term, but also in the medium and long term. In the currently observed structure, the price could be at the beginning of a strong uptrend, where Fibonacci extension levels such as 1618 and 2272 could be targeted in preparation for the third wave. Moreover, the current market position is supportive not only from a technical perspective, but also from an investor psychological perspective. The uncertainty and hesitation at the end of the second wave is gradually giving way to a willingness to buy, fueled by hope. This could be one of the catalysts for the third wave. This is because Elliott wave theory refers not only to price movements, but also to cyclical shifts in investor psychology. The nervousness and corrections experienced during the second wave give way to euphoria, confidence, and strong buying during the third wave. This transformation often leads to sharp and sustained price rises. With the start of the third wave, strong consecutive green candles on the chart, volume-driven rallies, and the rapid crossing of short-term resistances may be among the usual developments. In addition, if such an uptrend begins, traders may also encounter positive developments in terms of patternal structures. For example, pennant, flag, or cup and handle patterns that may form during the third wave process may be seen as structures that facilitate the price to move to new levels. At the same time, such patterns will show that the third wave is supported not only by technical analysis, but also by paternal structures. For traders, third waves are often seen as opportunities that should not be missed. This is because this wave is usually the strongest bullish period of the market. The stagnation that the market experienced during the previous correction is replaced by rapidly developing and resistance-free price movements. During this period, investors can have the potential to earn high profits by acting with the right strategy and discipline. Therefore, the current second wave process shows that we are actually on the verge of a great opportunity and that a much clearer upward trend may start in the market very soon. The RSI indicator is crucial for traders to understand momentum shifts in price movements. RSI is an indispensable tool for many technical analysts, especially for early detection of trend reversals and recognizing overbought or oversold conditions in the market. Looking at the current chart, there is a very clearly defined downtrend structure on the RSI. This trend line shows that the RSI, along with the price, has been in a downward trend for a long time. However, this doesn't always indicate a negative picture. On the contrary, such structures can often be one of the key technical signals that set the stage for a strong bullish move after a breakout. Analyzing the current RSI structure, it's clear that the RSI line has repeatedly touched this falling trend line, acting as resistance. These contacts often reflect the psychological limits of traders. However, each contact also increases the probability of the line breaking. The oft-quoted principle in technical analysis that the more a resistance is tested, the more likely it is to break, applies here. Therefore, retesting this downtrend on the RSI and breaking through this line raises the possibility of a visible recovery and even acceleration in prices in the coming period. RSI trends are as important as price. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.